So Tom Lee just did a fresh interview on CNBC. It kind of has me worried and other people worried about what's going to happen with the stock market going into the election. After the election, it could look really good for the stock market, but going into the election, there's quite a few red flags that he's worried about. So I'm going to play the interview of him right now. And then after the interview, I'm going to show you into my $832,000 trading account to show you how I'm oriented based on this information. So here we go.
It does take us to our talk of the tape. How much more can stocks rise? Let's ask Tom Lee. He's FundStrat's head of research and CNBC contributor, live with us once again at Post 9. Nice to see you.
Great to see you, Scott.
You know, since the Fed did their jumbo cut, the market really hasn't done all that much except for one day last Thursday. Why?
Well, you know, I think the Fed unleashed us on an easing cycle, and that's going to be positive. We know it's actually historically positive 3 months, 6 months out. But what stocks do in the next month is a bit of a coin flip, and I think that's what we're seeing because there's some repositioning that took place. And also we're now thinking about the 40 days into the election.
So does the fact that the election is but 40 days away sort of ruin the perfect scenario for stocks to get that post-Fed bump?
I think it delays it, just because, you know, in the conferences that I've been speaking at and seeing wealth managers and family offices, a lot don't want to commit capital until after Election Day. And
I totally agree with what Tom just said right there, because Trump and Kamala, they both have things that could be bad for the stock market. What if Trump starts a trade war? What if Kamala raises taxes like crazy? Both of those things have to be priced into the market right now, but once the election is over, one of those situations will be unpriced.
I don't think it matters who wins. It's just they want to get that event behind them.
Oh, so you think we're going to have sort of a dash to the finish after Election Day is out of the way?
Yeah, and that's pretty typical. You know, in fact, in election years, the November, December rallies are pretty tremendous. And in fact, when markets are up more than 10% in the first half, you also get big rallies November, December, sort of choppy through September.
So this is a chart of the S&P 500. A lot of volatility recently. Market went way down, way up, way down, way up. Just a lot of bouncing around going into the election season. So what Tom is saying is if you could hold on, if you have the guts to buy the dips leading up to the election, you could make a lot of money post-election.
You think investors are sold on the idea that this economy is going to make it? It's going to make it through. The Fed's going to pull this off. Is any of what we've witnessed since Fed Day doubts about the bigger picture?
So far, so good. This Friday, we get core PCE, and hopefully that confirms inflation is no longer on the front burner. But I'd say one thing I've noticed is that the number of investors and professional money managers that think we're already in a recession is very high. And so I think the evidence just has to be better than expected, and I think those views shift back to soft landing.
When we've seen, you know, recently targets for the S&P, Brian Belsky, I keep bringing him up because he's the most recent to raise his target up to the highest now on the street. I've asked you about, you know, the market lately. You haven't sounded like you'd be raising your own target to a degree like that, would you?
You know, I think there is a lot of upside in the foreseeable future. Let's say 3-6 months out. But for someone to tactically say we need to pin a 6,000 target and then put money to work today, I think it's harder to make that case because valuations aren't on the cheaper end, and we've already had a fairly sizable move. So I'm not saying I'm like bearish right now.
So I agree with Tom that the market is a little bit overvalued right now. So just go on Google and type in Yardeni Research. It's going to come to this page right here. Scroll down, go to S&P 500, click on S&P 500 right here, let it load up, and then we're going to go all the way to the bottom, and there's going to be a chart that loads up of the S&P 500 PE ratio. So this green line right here is the S&P 500 PE ratio. So on a forward basis, as of September 27th of 2024, it's 21.6. But just look at historically since 2004, the market appears to be a little bit overvalued right now. But keep in mind that interest rates are going down, and as interest rates go down, that's like gravity on the stock market, because just think about it, nobody wants to get a 3% bond, or they could get 10% in a stock market. So when the spread is so wide between a bond and what you could do in the stock market, historically speaking, most people will put their money into the stock market, and then the price earnings ratios will usually go up in the stock market as interest rates go lower, because there's really no other game in town. No one's really going to waste their time with bonds when they could get to 10% in a stock market.
I'd have a lot more confidence saying 3-6 months out, things are attractive, especially things like margin debt, right? It actually decreased in August, meaning investors have been deleveraging. Mm-hmm. It hasn't gone anywhere for the last 4 months at a time when markets are rising.
I guess my point would be, it would have been better articulated to just say you don't sound as bullish as you usually are. Is that fair?
Yes, I'm bullish into year end, but I'm a little less confident about how markets behave into election day. And not that I think we're going to have a huge drawdown. If we do have a big drawdown, I'd be buying that dip. But I also don't think we can make new highs and then see the market blast off after election day. So I'd rather sort of say things look a lot better after election day.
Can we make new highs if tech doesn't resume its leadership role in anywhere close to the degree that it had?
As long as tech is a market perform. If tech actually declines, that's going to be hard for the rest of the S&P 500 to compensate. But what we've seen so far, including days like NVIDIA and Tesla recently, is that tech is actually holding its own, but other stocks are starting to show catalysts and signs of life.
Yeah. What about the broadening trade? I mean, you look at the Russell, your big call, of course. Week to date's down more than 1%. Really hasn't done much at all. I kept hearing, hey, you got to wait till the Fed cuts. Then you go into the Russell. I don't know. What do you think?
Well, Russell had a big week last week. It's some profit taking now. But I think that there's, this is what bottoms look like. I don't think bottoms are straight up. I know in 2021, energy was bottoming, and it was also very choppy, but eventually made not only new highs, but then basically had a blistering gain in 2020 in the year following. So I think that's a multi-year start for the Russell. It feels choppy, but we're still near all-time highs, and there's a big fundamental case to own small cap.
All right, so let's dive into my trading account right here. So total value right now, $832,000. My 2-year return, I made over $566,000. This is true capital gains. I have not sent any money to Charles Schwab in the last 2 years. This account in total, I started with roughly $100,000. And year 1 and year 2, that is when I sent this money. And in the last couple years, I really haven't sent any money to this brokerage account. Number one, because I don't want to get the value too high over $500,000. But look at it, it's way over $500K right now because the stocks and the trades that I'm doing are printing cash. And the reason why is because SIPC insurance is only up to $500K in your brokerage account. Schwab has extended coverage. That's basically like FDIC insurance for brokerage accounts, but for brokerage accounts, it's $500K. If you want to learn exactly how I grew this portfolio so fast, check the link in the description below. I have a course that's coming out October of 2024. It's going to walk you through stocks, stock options, literally everything I know about the stock market is going to be in that course. I'm going to show you exactly when I make a trade, how to know if I should make a trade, when to exit the trade, how to see if things are undervalued versus overvalued. All of that is in that course. I make roughly $20,000 per month right now with stock options. So if you want to learn about that stuff, link below for that, check it out. All right, so heading into that trading account, this value is a little bit under $800K because I have multiple accounts. I have a couple Roth accounts. So this value right here is $766,000, but total value Schwab overall is $830K. So total gain loss in this account, I'm up $278,000. And cost basis is not accurate. Just super quick on cost basis. The reason why it's not accurate is because this only applies to trades that I currently have open. So let's say I bought Apple stock 5 years ago, and then I sold it 2 years ago and I made a bunch of money on it. When I sell Apple stock, it goes to my account in cash. And then when I take that cash and go buy shares of Triple Q, for example, that cash shows as the full cost basis, which it should because that's actually the cost basis. But the cost basis of the total account is not $489,000. It's roughly $100K, like I said. So coming down, you'll see I have like 912 shares of Triple Q. VOO, I have 461 shares. Tesla, I still have my 500 shares. We've been doing pretty good on those shares recently. And then this is my gain loss for all the trades I have right here. On the bottom, I do have a couple trades that I am down money on. I'm going to show you those ones. I put myself on the right-hand side so it's easier to see this stuff. So I have some Tesla puts that I sold, Triple Q puts that I sold, some Apple puts, IWM. I have TLT that I've been talking about. I have some NVIDIA. This one down here, SQQQ. This is my biggest loser. I'm down $16,000 on this trade. But believe it or not, I want to be down on this trade. You might think I'm crazy, but if I am down on this trade, I'm going to be up probably on most of these trades right here. So this right here is a hedge against the market. TLT is pretty much a hedge against the market too. Check out my other videos because I go into way more detail with TLT and why I think this is a sleeper trade right here. I do think this trade is going to make a lot of money, but I think it's going to take a little bit of time. That's why I did 3/21 of 2025 on the expiration date for those calls. And then total unrealized gain loss in this account right here is $278,000. And remember, these SQQQ calls that I bought right here and these other trades right here that I'm down on, it's a very, very small percent of my portfolio. They're all less than 1% of my portfolio, so I try to maintain that ratio. And then going up here on the right-hand side, for all the puts that I sold, the ones that are minus, those are puts that I sell, this is the equity in the account that I have to have in order to support that trade. So for example, these Tesla puts that I sold right here, it's a 170 strike, but I'm only required to have $44,000 of equity in the account. Now the equity that I use is these shares right here. I don't have actual cash in this account, but if I were to get assigned shares of Tesla for $170 a share, I could bring cash to Schwab from other places in order to cover that assignment, so it's no problem. But keep in mind, even if Tesla hits 170 a share, I don't lose money because over here I receive $30 per share in premium. So really my break even on Tesla is $140 per share, and right now it's $260 per share. So it would have to have almost a 50% drop for me to actually lose money on this trade. You can see right here, I received over $30,000 in premium when I sold the put on Tesla. I'm up $20,000 on it. And if I want to buy it back right now and close it out, I'll buy it back for $10,000, but my profit is $20,000 because I sold it for 30, buy it back for 10, I'm left over with $20,000. So trading stock options, you can make a lot of money, but you can lose a lot of money too. That is why I made this course, because so many of you guys are requesting it. I'm going to show you exactly how I do my stock options, all my logic behind it, because honestly, the stock market isn't hard, it's not complicated, but it's just hard to know what actually works. And I have no problem educating myself, so you should have no problem educating yourself, because I've honestly spent thousands of dollars on courses, I've been to seminars, I've read hundreds of books, and I know a lot of you guys are going to be like, oh, you're just another person on YouTube selling a course. But here's the deal. If I wouldn't have read any of those books, if I wouldn't have went to any of those courses or went to any of those seminars, I would have been nowhere right now. Educating yourself is the number one thing that you could do. Because if you don't understand what you're doing, you're going to go try to do what I'm doing and you're probably going to get wiped out. And the best part about the course is only course members are going to be allowed to get into my premium Discord. And the premium Discord is where I show you all my trades in real time, all my market updates. Every day after the market closes, I go in there and I do an audio update. I explain everything going on and what I see going forward. There's also a section in there for course questions. So as you're progressing through the modules in a course, if you have any questions, you shoot it in there. I'll answer your question and it's done. It's super simple. So definitely check that out. Link in the description for that. There's also a free stock market blueprint if you want to get started with that. And if you made it this far, like, subscribe, and I'll see you guys later.